Sup traders, welcome to Failure to Displace. In this video we're going to take a look at this really nice unicorn entry model bagging 3.69R before a very aggressive reversal in the London session on EURUSD. Let's jump into the analysis now and see how this entry presented itself. Before we continue with the main video, I just want to address a common question that I get asked, which is how can I trade with such small stop losses without a spread stopping me out of my positions? The answer is pretty simple. I use a broker with extremely tight spreads. The broker I use here in the UK is Trade Nation. They're a fully regulated broker with no commissions and spreads between 0.2 to 0.6 pips on average on the instruments that I trade. The other major benefit of Trade Nation is that if you're UK based like me and open up a spread bet account, your earnings are tax free. Yeah, that's right. Providing there's nothing unusual going on with your tax liability, any winnings you make from a spread bet account will not incur tax, giving you an instant 20 to 50% boost on your income. I can't tell you how satisfying it is to know that the government is not getting their dirty little fingers on my hard-earned winnings. Now sadly for you American colleagues, Trade Nation's not going to be an option. I don't believe there's a way for you to avoid paying tax on your earnings. You guys, you really have it hard. However, you can get some killer spreads through a fully regulated broker if you go ahead and check out Blueberry Markets. These guys have similar spreads, they're fully regulated in the US, giving you additional peace of mind that your money is safe, and their customer service is exceptional. Every interaction that I've had with them has been prompt, professional, and really helpful. Now I've left links for both of these brokers down in the description below. These are affiliate links, so if you do go ahead and use them to open an account, then I will get a small kickback, which would be greatly appreciated. However, if you prefer not to, you can just Google them. Whatever you decide, I would strongly encourage every single one of you to take a look at getting into a broker with these kinds of tight spreads. When I moved over to these guys, it was a game changer. My consistency improved massively, whereas previously I'd often get stopped out as brokers suspiciously opened up the spreads at the exact time I was entering. I'm sure many of you have experienced it, and it's one of the most frustrating things ever, especially if your analysis was correct and you take a loss due to a large spread when it should have been a solid win. With all that said, check out the links down below and let's jump back into the main video. So as we did yesterday, we are very high up in the range, seem to be hovering around in the middle of nowhere. So I'm going to start the analysis off on the 1 hour time frame. I'm going to scroll back in time just to see what price action and liquidity levels we are potentially interacting with. So these are the liquidity levels from yesterday that we were working with. They have obviously been taken. We are now going a little bit higher as we come into the London session. We've swept the New York high from Tuesday the 15th of August, and we have just swept the high from Monday the 14th of August as well. So I'm going to highlight that on there. We can also see on the Friday the 11th of August we do have a fair value gap on the 1 hour time frame. And the fair value gap is in here. I'm just going to extend this to the right so that it goes across our screen so we can see that 1 hour fair value gap as well. So we're kind of working with this price action from the middle of August. As we stand at the moment, so Asia has pumped up again. So similar to yesterday's price action, we've displaced above the previous day's high. So we've taken previous day's high here. We are breaking above. We've gone for an additional liquidity level now. So there's a potential of a reversal on at this point. What I want to do is highlight our 1 hour swing highs and swing lows. We've got our 1 hour swing high here, which is our most local buy side liquidity. Our next swing low would be the new day opening gap here. So we kind of got relative equal lows down here for sell side liquidity. There's no 1 hour fair value gap, so let's jump onto the 15-minute. Again, we can see this displacement, so we're leaving bullish fair value gaps at the moment as we've moved up to take out that high. So we've got this 15-minute fair value gap in the middle of this range here. There's a potential support area that's acted as support. Obviously we are in a premium at the moment, so a premium discount will go from the daily low to the daily high. Anything above the 0.5 is a premium, anything below is a discount. we do have this 15-minute swing low that we've got coming into the top of this 15-minute fair value gap. So there's a potential for a sweep of liquidity into a fair value gap at this point. This would be sell side liquidity. And we can see on the 15 here, we've had 2 attempts at this high. So we've got relative equal highs on the 15-minute time frame, which is the Asia high as it stands. And we'll make a note of this bearish fair value gap on the 15 as well. See how price is going to interact with that area. Specifically, we're looking at the 50% levels of each of these PD arrays. So do have a bullish bias again, so the trend is your friend, as they say. Obviously, we've been massively bullish. We've still got a lot of inefficiencies below us from last week, so this does really need to be filled, but we'll stick with the trend and we'll need to see some kind of solid confirmation that we are having a reversal before I start worrying about that. So I do have a bullish bias at the moment, especially given that we've got relative equal highs at this point from the Asia session, and we are trending higher. So pull back into a PD array, sweep of liquidity, looking for a continuation to those Asia highs would be a nice price delivery for this session, in my opinion. Now, if we're going to be looking for a short, then I would need a sweep of these highs to then look for a reversal coming down. I wouldn't be looking to take a short off this PD array, this fair value gap. Let's drop onto the 5-minute. We'll start scrolling through price action now. So we are now into the 2 AM candle, which is the open of the London hour. This sell side now is an hourly swing low as well. So just to confirm, we now have an hourly swing high up here and an hourly swing low down here. So I'm placing a lot of emphasis on hourly liquidity at the moment, looking for sweeps of liquidity. Now we are looking at our 15-minute cycles as well for entries. So we want to try and align an entry with the open of a 15-minute candle. Obviously, as we are at the moment, we are inside the middle of this range, so there's no trade at this point. 230, still no trade. We are inside the range, making a run for the high. So we'll put in a London high here. This is 230, so we do have a session high at this point. Which is buy side liquidity. You can see this 15-minute fair value gap, we kind of traded into it. This would have been then an inversion fair value gap, so we would have expected it to hold as support, but we traded straight back through it again. So this has basically been rebalanced now. We've gone through one side, come back the other side, so I'm not worried about that fair value gap any longer. We've aggressively moved down to sweep this hourly low, 245. So we're going to be looking potentially around 3 AM for an entry. Let's have a look on the 1-minute time frame as we are attacking this low. So we've swept the low, strong displacement down into our fair value gap that we've highlighted, just above the premium discount divider here, this green line. Oh. So this green line is our premium and discount area. So right on the cusp of this. Just going to zoom in so we can see our price action at this point. Let me turn on our fair value gap indicator. So we can see we're leaving bearish fair value gaps down here. We have this last 1-minute bearish fair value gap. So if we are following price action, we've had a sweep of liquidity, 253. So we're going to be looking for an entry around 257 through to 303. So anywhere 3 minutes either side of the open of a new 15-minute candle. The significance of this is that it is also the silver bullet hour that we are coming into. We can monitor our price action. So we're coming from a high to a low, to a high, to a low, to a high-ish, kind of relative equal highs here, down to this low. So we're going to be looking for a break of structure from this level here. I'm classing this as a swing high. So that I did have a comment on the video that I posted that there was no break of structure. This is a swing high. We've got a lower high to the left, lower high to the right. So this is our last 1 minute swing high, which is my break of structure. These are the last up closed candles before this swing high that created a new low. So this is my order block at the moment. Sorry, that is an order block as we stand at the moment. So we're looking for a strong displacement through this area. So there's our displacement through the area. So we have closed now over a bearish fair value gap that we had at that point. This is now a bullish fair value gap. An inversion fair value gap. We leave this candle here, so this inversion fair value gap has held price up. We've got an inefficiency on the bullish side, so bullish fair value gap overlapping a bearish fair value gap. This I would class as a displacement candle. It is significantly bigger than these candles around it. I will say that this is a very large candle, so I agree with the comment that was made that we do have significant bearish candles. The context to this trade is we have swept liquidity into an inefficiency, so a 15-minute fair value gap. I am already bullish because of the relative equal highs that we placed in at the Asia session. And this pattern, so our price pattern, we're looking for low to a high to a low, breaking that to a higher high, is happening at the open of a new candle here. So anywhere 3 minutes either side. This is 257. We have tapped this candle. We come back, we can see we don't break this low, we respect this. So as we were coming into this, I took an entry from the break of this candle high, expecting this breaker block to hold. We have 3 PD arrays to act as support. So we have now our confirmed breaker block, because we've traded through it. We have our balanced price range in this area, and we have this 2 consecutive down closed candles, which are an order block. So one thing that I've started thinking about in my analysis is that price will deliver from internal liquidity, which is fair value gaps imbalances, going for external liquidity. So we have reached internal liquidity. Therefore, I would be looking on a higher time frame for a reaction from internal liquidity, being the 15-minute fair value gap, for price delivery to a 15-minute swing high, which would be our buy side liquidity at the top of the session. So this was the premise. Again, we have a strong engulfing candle at 259. So confirmation, if you didn't get in here on the break of this candle, which is where I got in, anywhere on this breaker block because I was convinced this is going to hold, we have got an engulfing candle at this point. Entry top of the breaker block. This candle comes back, tests the top of the breaker block, and then pulls away. So it was an exact entry at 3 AM at the open of that candle. So I was in a little bit early because I was anticipating this holding. 3 AM we did get the tap at the top of the breaker block by a couple of points, and then we are away. And then our target, we are looking for opposing 15-minute liquidity, which is our buy side liquidity at the top of the session, is our closest 15-minute swing high. So we're delivering from internal 15-minute liquidity, this 15-minute fair value gap. We're expecting to deliver from internal to external, which is this 15-minute swing high that we've highlighted at the top of the London session. Confluence of opening into the new hourly candle. Price obviously drives very aggressively, straight to take profit, absolute textbook. So that was the entry. So that was the analysis behind this long entry, sweep of 1 hour liquidity into a 15-minute efficiency. We had our perfect unicorn model. In my opinion, this was a very nice example that we had. We did have an engulfing candle at this point, engulfing this section of price action, leaving a balanced price range. We know that I love balanced price ranges. They are a superb PD array. And then we did have a secondary engulfment candle, engulfing this candle at 259, tap, and then away. I do appreciate maybe not a massive displacement candle going higher, but given the confluences that we had at the open of the new hourly candle, I was more than happy to take that trade. We can see ultimately we were aiming for the buy side liquidity at the top of the Asia range. So the first take profit, 80% of the trade taken off at this point. We're already up over 3R at this point, 3.6R, leaving a runner potentially to take out this relative equal highs, even looking to run it even higher into those highlighted fair value gaps and liquidity that we had before, if we were going to continue with the massive bullish momentum that we've been experiencing over the past 2 weeks. We can see here, coming into 309, 310, we do get a huge engulfing candle. So this candle again is significant on the bearish side. So this is a good indication now that maybe this buy is short-lived and the price delivery is with the bears at this point. Price ultimately comes back, begins disrespecting all of these bullish fair value gaps, leaving bearish fair value gaps in their place. We have balanced price ranges at this point. Where we've had bullish fair value gaps overlapping with bearish fair value gaps. It's not that, it's a BPR. Tap in for continuations lower. So we can see price delivery is changing. More bearish engulfing candles coming straight for the low. So if you were trading in line with the actual huge candles, then yeah, I would agree that there is no arguing that the displacement is to the downside. However, at this point, I still believe that this is a valid trade, given that we'd had a sweep of 1 hour liquidity into an inefficiency with displacement larger than the candles around them at least, leaving fair value gaps and this BPR into the open of a new hour. So I would take that trade all day long. Then as price continues, we begin working our way lower. Can you see the respect of the 15-minute fair value gap? We've closed through the 15-minute fair value gap, so this can potentially act as an inversion fair value gap now. So what once was support could potentially be returning to resistance. We are into a discount approaching optimal trade entry of the larger range. Resistance here, look, 50% of that 15-minute fair value gap tapped perfectly. So we're into 345 as we trade through this and then accelerate away. And now price is just beginning to consolidate with no clear direction. So that was the trade. I don't believe there was an entry at this point for a short trade. We didn't get the unicorn model. I would have been hesitant to take a short given the massive bullish momentum that we've had over recent weeks, and we haven't taken those equal highs. So there was no short entry for me at this point. The long entry was the play as far as my analysis goes. So I hope the analysis was useful. If you did enjoy it, please leave the video a thumbs up. If you got any questions or comments, then please leave them in the comments section below. Your feedback is always greatly appreciated. Many of you guys do open my eyes to certain aspects of the charts that potentially I've missed, so I really do appreciate it. And if you're enjoying the content, please consider subscribing. Dropping videos like this more or less every single trading day. Thank you for watching, and I'll see you again in the next video.